For the View out of Washington, let's bring in Heather Boushey, member of the White House Council of Economic Advisors. Heather, a lot to get through to. Really appreciate you joining us today. Would love to start by talking about the labor market, though, because Emily just walking us through those claims numbers we got today. It does feel like unemployment is headed in this downward trajectory, but the kind of drop off we saw early on is starting to stall. How do you view it?
Well, what I see is a labor market that continues to recover week after week, month after month. Now, we expect that there might be, these data are volatile, so we don't make too much of any 1 week or 1 month trend. But when you look over the past few months, since we put in place the American Rescue Plan, we can see that it is working. Over the past 4 months, we've created an average of 540,000 jobs each month. And you compare that to the 3 months prior to February, when we were only creating 60,000 jobs each month. So the trend is certainly improved. We're down to an unemployment rate of 5.8%. And, it's moving in the right direction. Of course, there's still more than 7 million folks out of work. We are still recovering from a pandemic and, struggling to get everyone back into those jobs and back into good paying jobs, which is the goal of this administration. But I will emphasize that, what I see here is that our plan is working, and it's good to see that kind of economic outcome.
Yeah, there are obviously, I suppose, among Republicans there who might kind of highlight the slower than expected bounce back, at least as we see it now, and have leaned in on the idea of lingering unemployment benefits, maybe preventing people from wanting to get back into jobs that they may have had before. We were chatting with the lieutenant governor from Hawaii yesterday about that. He seemed to indicate it could be a mix of that and also still fears around COVID-19 as well. How do you see it in kind of weighing these decisions to go back to the office or back to work right now at this state in the recovery?
Well, at this point, we have, a significant number of adults have been vaccinated, including those younger adults who were concerned about over the past few months, making sure that they had access to the vaccine. And of course, we've spent a lot of time and energy to, make sure that schools could be reopened, make sure that those childcare centers were available, so we could help families with what they needed so that workers can get back to work. I will note, though, that still about 1 in 8 childcare workers who was employed pre-pandemic, those numbers are down by about 1/8 relative to pre-pandemic. So there is still some hiccups there in some of the supports that families and workers need. And, so that is one set of issues. Now, here's the thing. We are recovering from a historic pandemic that is, taken the lives of about 600,000 Americans. It has disrupted supply chains. It's disrupted communities and how families work and where they work. And we were never assuming that it would be easy to just turn the economy back on. But I think when you look at all of the data and the evidence, people are getting back to work. They're getting back into those jobs. Businesses are able to, ramp things back up. And, as we work out those hiccups, those supply chain issues will also begin to work themselves out.
You've got the bipartisan group of lawmakers today meeting with the president on the infrastructure deal, the tentative price tag, at least, with the deal that was reached, $1 trillion with $559 billion in new spending. We're still waiting on the specifics of the details, but how close do you think we are to try to getting this across the finish line? Is the White House prepared to back it?
Well, the president has said, from day one that he's had 2 bottom lines. One is that inaction was not an option. And the second, of course, was to not raise taxes on anyone making less than $400,000 a year. And so we are all excited that this action is moving forward, that Congress is coming to a deal that can make these really historic and important investments in America's infrastructure. Infrastructure is absolutely critical to the American economy. It's, we have to make sure we have those roads and bridges. We got to make sure that we have safe drinking water and all the things that are part of our nation's physical infrastructure. So certainly seeing a deal come through that acknowledges the president's bottom lines is incredibly important. Now they're talking just across the way, today, and I think we're all eager to see how those conversations go.
Yeah, it's definitely been one of those priorities for President Biden. Of course, the numbers come down, initially talking about more than $2 trillion, now kind of focused in on those roads and bridges, traditional infrastructure, as some across the aisle have called it too. taking that down to about $559 billion or somewhere around there. I wonder, though, I mean, it seems like progressive Democrats are a little skittish about the idea of coming back to get some more progressive items when it comes to sustainability, greener energy investment there on the other side. I mean, how confident are you that this will be a path to make all Democrats happy if you're able to get things done? Or is this not potentially going to risk maybe some of those more progressive agenda items?
Well, my key concern as an economic advisor to the president is making sure that our nation is making the investments and the policy that we need so that we can have an economy that is strong and stable and delivers for the American people. The president has been very, very clear that his number one goal is to grow and strengthen America's middle class. And so those pieces of the plan that do not appear to be in the bipartisan deal, making these really important investments in climate, making sure that we are putting our country on a path to cleaner energy that gets us to net zero carbon emissions, and really importantly, making sure we are making those investments in the care economy, because as we've especially learned last year, if workers don't have access to care, they can't get to work. We just talked about that in terms of some of the hiccups that are making it hard for people to get back into the labor market and stay there. Those remain important priorities, and the president has repeatedly said that he is committed to those. So, the president is focused on making progress where he can. This bipartisan deal takes one piece of the package, but he remains committed to the fulsome agenda that he laid out through the American Jobs Plan and the American Families Plan.
There is still a question about how any kind of infrastructure bill would be paid for. Obviously, we've heard the Democrats sort of push for a increase in taxes on corporations as well as the wealthy. And you've heard the flip side of the argument, which is to say that at a time of recovery, this is not the time to do it. I know you're speaking from the perspective of the Council of Economic Advisors, but I wonder, when you look at where we are in the recovery, can Congress afford to do that? In other words, if that is the direction things are moving in, what do you see as the impact?
Well, I think the question is really, can we afford not to? A few facts here. So first of all, we know that the 2017 Tax Cuts and Jobs Act bill that President Trump signed into law did not deliver for the American people. We were promised that would lead to a significant increase in investment, and that would lead to a significant increase in wages. And there's been a number of research studies looking at the economy pre-pandemic that showed, nope, we did not see that promised increase in investment. And so I think what we need to do is, for the economy's sake, we need to revisit that. We need to make sure that our corporate tax code is focused on encouraging firms to make investments here in the United States, not to ship profits overseas, not to ship jobs overseas. And at the same time, we also know that we have not been enforcing the laws on the books when it comes to the highest income taxpayers in the United States. By estimates from the IRS are that if we make an investment in giving them the tools they need to just enforce the laws on the books, after decades of starving of them of the resources they need, we could get over around $700 billion. Now, those are important aspects of making sure that our tax code is fair, that is fairly enforced, and that it encourages domestic investment in productive enterprise. And we know that what the Trump administration did just didn't work. So I think there's an opportunity here to get the resources to make the much needed investments in America's future, in care, in climate, and in all the things, and have a tax system that can be more fair and can deliver for the American people and for American industry.
And we'll be watching to see how these compromises all shake out, but clearly a lot of progress potentially being made here in the short term. Heather Boushey, White House Council of Economic Advisors member, appreciate you taking the time here to walk us through all of it. Thanks again.